There are various inventory valuation methods which we're gonna cover the FIFO under this video. The FIFO is one of the topest methods which is accepted by international financial reporting standards. Be with us till the end of the video. This is Milad Akbari from Akbari Education. Welcome to your channel. As I told you, we're gonna cover the inventory valuation methods and specifically the first in, first out, which is called FIFO. What we're gonna cover in this video will be the inventory valuation methods. What are them? The most popular ones. And what is FIFO? Example and practice question will be there. We have the four general inventory valuation methods, which is mostly and widely applicable. Probably there are more, but these four are more applicable. One is the FIFO, LIFO, and the third one is weighted average pricing method, which is subdivided to two more categories: the cumulative or perpetual weighted average pricing method and the periodic weighted average pricing. Let's go to a part which we will cover in this video, which is the FIFO. FIFO, what comes first will issue first. From its name, first in, first out. What comes in the business as an inventory in the first time, or the first comer will go out from the business, from the stock, as the first option. So it will end up, what comes last will stay as a closing inventory. Remember that. If I purchase this one first of all and the second one second, then I will issue this first one, and what will be pending in the business or in stock will be the last one. The last come will go last. Remember this point. Let's go directly to an example and it will clarify the word. The example says during the month of May, from 1st to 11 May, we had some receipts and some issues, and there was an opening inventory at the beginning of the May. What we're gonna cover, we're gonna record this in the table which is shown here, which has four columns: a date, all the balances or items you have receipts, and all the issues you had, and the remaining balance at the end of the period or at the period in the stock. As per the method of FIFO, we're gonna transfer these balances, the mentioned balances at the bottom of your screen, to this area that we can see what is the cost of the issue, the purchases, and the balance available. First of all, at the initial date, at 1st May, we had some opening balance of 100 units at the rate of $2, which equal to $200. This is the opening balance. Second one, at 3rd May, we had some receipt. 3rd May, the receipt of 400 units at the rate of 2.1, total equal to $840. This $840, the only point for FIFO. We had 100 units. We cannot mix these units and the costs. That's why we will record them separately, and it is one of the difficult points for the FIFO, which make it much more complex when we have various number of or various types of items. 100, we have 100 at the rate of $2, and we purchase 400 at the rate of 2.1. Total of them will become 200 plus 840 is equal to $1,040. This is the remaining balance at the end of 3rd May. At the end of 3rd May, $1,040 is the value of inventory in our stock. After that, we had some issue. This issue can be direct sell we transferred these items for the sale, or there are issue of the raw material to the production department. Both of them is possible. That's why, remember, you can mention this area as receipt or purchase, and this area can be written as issue or sale, depend upon the nature of your company. On 4th May, we have some issue. On 4th May, there were issue of 200 units. Now the point of FIFO will come. What come first should go first. Therefore, we will issue 100 units at the rate of $2. After that, the next option available will be the second comer to the business. Therefore, the remaining balance of 100 units, which total become 200 units of issue, will be issued from the item with $2.1 per unit cost. The total of that will become, try to use your calculators, even if you can calculate that, 100 multiplied by 2 plus 100 multiplied by 2.1. The total is equal to, multiplied by 2.1, $410. $410 is the total cost of our issue. The remaining balance, we have issued this one and 100 from this one, so the remaining balance is 300 units at the rate of 2.1, which is equal to 300 multiplied by 2.1 equal to 630. So we can say after this issue, the remaining balance in our stock is about 630. Let's continue with that. After that, we have some receipt at the date 9th May. 9th May, there are some receipt of 300 units. 300 units receipt at the rate of 2.12. The total of them, 300 multiplied by 2.12, is equal to $636. Now the case is here. This is our 300, but we had another 300. So our 300, first 300 was at the rate of 2.1. The next 300 is at the rate of 2.12. 630 plus 636 is equal to 1266. After this receipt, we have now $1,266 as the remaining balance in godown or stock. The issue at 11th May, there are some issue at 11th May of about 400 units. The 300 units will go out at the rate of 2.1, first in, first out, and the remaining 100 units will issue at the rate of 2.12. So 300 units at the rate of 2.1 plus 100 units multiplied by 212. The total is equal to 842. 842 is the balance we're gonna issue, and the remaining balance will be only 200 units at the rate of 2.12. So 200 units multiplied by 2.12 will end up to $424. Let's analyze this table. What's going on here? You can see this balance pending is called the closing inventory. This is the balance at the end of 11th May, which shown as the closing inventory value. And this balance as a total, we can say this is the cost of what we have issued from the business, whether to production department or directly as a sell. And these are the items we have purchased. You can total them and you can consider their values. Let's go ahead. We have the practice question. The practice question had said that GCO makes the following purchases and sales. There are 3 purchases at the 1st January, 31st January, and 28th February. And there are 2 issues for 3,500 units at 15 February and 14 March. The question said, at 31st March, which of the following closing inventory valuation using FIFO is correct? What is the closing inventory value at the end of the period using the FIFO method? First in, first out. So I recommend pause the video, and after that I will solve for you this one. So to continue with that, remember we had some purchase of 4,000 units at the 1st January, and the total of sales is only 3,500. We can use the table I have shown you, but the cases here, in most of the certifications with MCQ questions or multiple choice questions, you have limited time. That's why you need to find out the easiest way to solve these kind of questions to meet the deadline. That's for what we're gonna do. We have 4,000, 1,000, and 1,500 the receipts. What we have receipts, 4,000 or purchases, 1,000, and the remaining 1,500. But what is our issue? What we have sold is about 3,500. We can see that this 3,000 is already covered within the first 4,000, and the remaining 500 is also possible to be covered here. So what we will conclude that 500 from this one is still pending, and we have still this 1,000 and 1,500. Therefore, what we're gonna do, the remaining balance of the business will be this 500 plus 1,000 plus 1,500. So let me write down that first. The remaining balance of the business will be 500 at the rate of will be 1,000 units and will be 1,500 units. The 500 units, we have the 10,000, the 4,000 units was $10,000 total cost divided by 4,000 units related to this one. It will end up to 2.5 per unit, $2.5 per unit, multiplied by 500 will end up to $1,250. For remaining 1,000, there is no touch. Even you are not required to find out the cost per unit. The 1,000 unit cost was about $2,000, and the 1,500 units cost was about $3,750. You can add them all together. 1,250 plus 2,000 plus 2,000 plus 3,750 equal to $7,000. So we can see option C is the correct one under FIFO method. Thank you so much for being with us till end of the video. I appreciate if you can subscribe our channel, press the notification button, and if you have any comment, kindly share that with us. And more than important point is to share this with your friends. Thank you.